On today's Domain Sherpa, we're joined by Charlie Shrem, one of the very first people even aware of Bitcoin and a brilliant catalyst in the crypto industry. Plus, Andrew Rosener, CEO of domain brokerage firm Media Options, an expert who sees radical opportunity built on the intersection between domains and crypto. Listen to today's show for a thought-provoking conversation from two innovative leaders. First, serious about online trading? Secure your funds, keep your merchandise safe, and use a company that keeps the buyer and seller protected the whole way through. That's escrow.com. Payments you can trust. Finally, if you're a domain name investor, don't you have unique legal needs that require domain name technical know-how and industry experience? That's why you need Stephen Lieberman of Greenberg and Lieberman or Jason Schaefer of Esquire.com. Go search for Jason Schaefer or Stephen Lieberman on DomainSherpa, watch their interviews, and you can see for yourself that they can clearly explain issues, can help you with buy-sell agreements, deal with website content issues and UDRP actions, and even help you write your website terms and conditions. Stephen Lieberman and Jason Schaefer are the lawyers to call for internet legal issues. See for yourself at Esquire.com or APlegal.com. Hey, Sherpa Network. Thanks for joining us today. We are delighted to have Charlie Shrem on. Charlie of Crypto IQ. You're one of the earliest adopters of Bitcoin. And the reason that we want to have you on Domain Sherpa is one of my favorite quotes of yours, blockchain technology is not just money, it's a whole new infrastructure. Charlie, will you give us a background for a minute or two, who you are and how you became one of the very first Bitcoin investors?
Sure. Thanks for having me on the show today. Hey, Drew, and hey, Tess. I got involved in crypto in early 2011, late 2010, when crypto actually didn't really exist. It was just called Bitcoin because it was just one.
Yeah.
But I was in the right place at the right time, and I was just hanging out on an IRC chat room one day, and someone started talking about this crypto thing. I don't know who that person was. It could have been part of the original Satoshi group. And I fell down the rabbit hole and fell in love with it, and I realized that this is the next iteration of the internet. This was, the internet, my father and his generation was around when the internet had its whole huge coming out and how it shaped the world that we live in today. And then I realized Bitcoin is going to be a lot bigger than money, and it's going to be bigger than that, and it's going to shape the infrastructure, and everything that we're doing will be around blockchain tech, and it's going to take a very long time. The first thing I needed to do was get Bitcoin in the hands of as many people as possible. So I started a company back then to make it easier for people to buy and sell Bitcoin, which was BitInstant. We launched in 2011, and we were handling almost all the volume of people buying and selling Bitcoin in those days. And it was a lot of fun. We had a lot of fun. Went on and founded the Bitcoin Foundation and just was involved in a lot of projects and had a lot of fun along the way and did a lot of really cool stuff. And here we are almost 10 years later or 9 years later. It's crazy how much time has flown.
Yeah, it's a bit of a wild ride for you, I think. So you really saw right off the bat that, the internet had been a new change for your father's generation, and this would be the new change for this generation. Many domain investors recognized and were early adopters of the domain name system in a similar way. I think, it's definitely the same principles. So I know that you've worked with our CEO, Drew Rosener here, on the domain side of things. As you've learned more about domain names, what characteristics do you see in common and what makes them different?
It's a good question. It's a very good question. I'll tell you personally the way I see it. With cryptocurrency, a lot of people who buy cryptocurrency today see it as an alternative asset class, right? So, that back in the day, it was you have a portfolio, you want to diversify your portfolio, stocks, bonds, cash, whatever. Now it's people want passive or active income that and alternative real estate investments more for like the digital age. So personally, I have portfolio that includes real estate, but it includes real estate that I could create income off of. I have some digital assets, and I saw domains as being long-term digital assets because they have the same properties as Bitcoin and cryptocurrency in that they're scarce, right? So the certain domain names have scarcity. You can never have any more three-letter.com domain names. It just won't exist. So you have it over time, will gradually increase over time. They're fairly liquid, and you see liquidity changes as well. Same thing with cryptocurrency. They're digital. They can't be taken away from you. They can't be controlled by any like other third party. You still need to control some counterparties, but it's a work in progress. And so it's kind of the same thing here, right? It's the same thing. And the people that invest in domains as long-term investment strategies also see cryptocurrency. And so there's a overlap. Yeah. Drew,
totally. So much overlap. So 2 points. My first introduction to Bitcoin ever, and when I say introduction, I mean literally it was just the first time I like heard the name, was October 2010. And we had a client named Brian Cartmel. I don't know if you've ever heard of Brian Cartmel.
Oh yeah, I know Brian Cartmel. He sounds so familiar.
He's super early adopter in both domain names and Bitcoin. And he
was a customer up at Instant in the early days.
He
was 2012. I just looked up his email address and I helped him out with a bunch of orders and stuff, and we did some business together. It looks like. Oh yeah, he helped me out with a lot of stuff. He's
literally one of the smartest guys I've come across, and just unbelievable visionary. And I mean, literally, he was one of the first people to ever invest in domains, one of the first people to ever invest in Bitcoin. And I remember we were brokering a domain for him. It was a pretty big domain. And, he called me up after we sold it, I guess. And it was October 2010. I have an email somewhere with the exact date. And he called me and he was like, listen, I'm basically going all in on this Bitcoin thing. And I think you should get some. And I was like, man, I was just launching media options at the time. It was early days. My head was occupied. I had my nose in a grindstone. And so I ignored him, basically, is the moral of the story, unfortunately. But I think Bitcoin was like 26 cents or something at that time. And he was like, I'm going all in. And we just, sold the domain for a lot of money. And he put it all into Bitcoin. So he did well, I imagine. I don't know what's going on since then. I know that he moved to New Zealand and gave up his U.S. citizenship.
Yeah, he did. He did that a long time ago.
A long time ago. Yep. Long time before Bitcoin was, probably even before it was even hundreds of dollars. Yeah. So, super interesting guy. Second point I wanted to make was, we have a friend in common, Gabe. I won't say his last name just in case he doesn't want me to, but he was the one that introduced you and I in the first place. And he and I, when I was living in Panama, were rapping about, that similarity that you were just talking about with domain names and cryptocurrency. And he didn't know anything about domains. But as soon as I started telling him my perspective on domains, he immediately got it because he understood Bitcoin. And it's true. The principles are the same. And it's mostly
exactly
backed by scarcity.
It's a big overlap.
Yep.
So, and as the future develops here, we're wondering, Drew has some very interesting ideas about how your identity will be confirmed or portrayed in the future. Your wallet, your bank account, everything that will be wrapped up into that. Drew, you want to put that question together a little better for Charlie?
Well, so, yeah, I mean, I don't have it well formulated really, but I do believe that we're moving, obviously, this isn't anything revolutionary. We're moving towards an all digital world. And so there's lots of people coming out with different solutions for how to create the framework for that. But to me, it's like, well, the original blockchain was the DNS system. And
it was.
Domain names are what probably, other than Bitcoin, maybe debatable, the most secure blockchain, certainly the one with the longest track record and the most proven. And so to me, it's like, okay, so in a future where everything is digital, I think it makes a lot of sense for every person who wants to be connected to that world to have their own domain name in some form or another. And that domain name represents your identity. It represents how you connect to all these various networks, how you connect to devices, and it becomes your bank account, your wallet. It becomes, basically everything about you. It's your representation in a digital world. And obviously cryptocurrency, Bitcoin, whatever, however all that plays out, plays a major role in all of that. But I'm wondering about all of these identity projects, these current, crypto solutions that people are coming out with, like Vinny Lingham's Civic, and whether or not this would disrupt that, or who we actually just sold identity.com to.
Yeah.
And I'm wondering if this, that idea disrupts the future of those projects.
So who manages the DNS? Who manages the domain name system? It's like it's an organization, right?
Yeah. So there is centralization because it's managed by ICANN.
But it's different. I'll tell you why it's different, because it's still somewhat. So the point of decentralization is because if it breaks, like if you have 51% of all the miners that try to do something that's against the integrity of the system, the whole system collapses, right? Same thing with ICANN, right? If they were to do something, and I'm assuming it's somewhat transparent, right? If I bought a domain name and they said you can't use this domain name anymore because we don't like you, then kind of the whole integrity of the system would collapse, and everyone who uses it would go against and say, listen, how do we know if you're doing it to him? How do you know you're not going to do it to us? The values, everything would go away. So it's kind of the same thing.
Yeah, I agree. And so that's always been one of my arguments. And I'm glad you say that, because I've had very little positive feedback or agreement on that subject, that ultimately, including Bitcoin, every single blockchain has an Achilles heel, which is the DNS system. I mean, the DNS system is the pipeline on which every packet of data has to be transferred. And you can't make an on-chain transaction without transacting over that DNS pipeline. And it all comes back to that one centralized organization of ICANN.
Yeah.
I think
that'll change.
Well, so that was actually one of the other questions I wanted to ask you is, like, can you imagine a new internet? Like, do you think that that's even possible? Like, could we create an entirely new internet, give up everything we've built to this day, and create a new, completely decentralized internet?
I think it'll happen with efficiency. I think it'll happen with as time goes on, they need to have more efficient systems. But the problem is that the current DNS, the way it works and how everything works, it has so much market share already. It's going to be hard to change that, right? So Namecoin launched. Yeah, Namecoin launched and tried to have a decentralized DNS system, but it didn't get any market share. No one wanted that. And what .com domain names, unless ICANN completely gives up those rights to some decentralized system, which could potentially happen if there was some incentive for them. But everyone wants, you tell me, what's the order of, you have .com, .net, .org. There's a hierarchy, right? I actually didn't realize that the .nets were higher than .org. I thought .org would be higher.
Well, so that hierarchy, as you say, has kind of been shattered in the last few years. So that was always the case, right? It was like, okay, you've got .com, .net's maybe 10% of the .com, .org is maybe 5 to 10% of the .com. Some cases the .org is better than the .net. In the last few years, I think that's been completely shattered. Now you've got 1,000+ new domain extensions, all competing for second best. And so what that's done is it's diluted that second place tier.
Yes, but I feel like it's made .org more valuable.
.org's actually got an identity, which it's been able to maintain. And .net is kind of like the redheaded stepchild that nobody ever liked. And so
it's true.
But Charlie, Drew, I don't know if you heard him. What Charlie just said right now was
it's made .com more valuable.
Oh yeah, totally, 100%.
It's introduced people. It's now they buy domains. Now they want. It's the same reason that altcoins made Bitcoin more valuable.
I agree.
It's the same thing.
Yeah,
Yep.
very interesting. And, I think, as we're speaking of the future here, Drew is such a nomad in general, and we've really seen this age of digital nomadism become possible. As we're looking at this future of an all digital world, how do you think crypto will play into that, particularly with the global borders? What are your thoughts surrounding that?
It's a good question. So, you're asking me or asking Drew?
I'm asking you, Charlie.
You're seeing it's a crazy world, and I mean we can go down the rabbit hole as much as you want. But it's the reason. Look, I'll be honest with you. It's the reason Drew moved to Portugal. It's the reason I moved to. Can we not say that publicly? We have to say that you moved to.
No, that's fine.
Okay, and I moved to Florida here. It's the same thing because now we're in a world where people are waking up and saying, why the hell am I living in places like New York or San Francisco, right? Why am I paying crazy income taxes? Why am I paying crazy property taxes? Why am I living in this cold weather and having a stupid low quality of life when it's such a high cost of living? It's the same thing I said, where you have your work. You can be your own boss. You can take your own, what you're good at and do it yourself instead of needing to be with a big corporation. And this started like 10 or 15 years ago. With cryptocurrency and some of these other industries, it's definitely gotten a lot bigger. But it allows now for you to like do whatever you want and live wherever you want. And that's why I moved here. And it's a different world.
So what's the, I mean, I have my sort of, let's say, extreme vision of where this goes like 20, 30 years out. But what do you think? Do you think that cryptocurrency, one of the things super early on, I saw an interview with Roger Ver, and he talked about that, one of his ideals was that, Bitcoin would eliminate borders. And that really struck me. Like, domainers were kind of the first digital nomads because by default, I mean, the internet is what created digital nomads. And, so that struck a nerve with me. I was like, fuck, I'm American, but I don't necessarily feel or identify as American. I haven't lived in America for 11 years. My kids and my wife are German and Panamanian. I don't like the idea of borders. I don't like the idea of like, it's like, I just want to live in Lisbon. It's like tomorrow I might want to live in freaking, wherever, Spain or Italy. And as long as I'm a productive member of society, most places should want me to live there. And I feel like cryptocurrency is the first time where it's like, okay, it should have the ability to wipe out borders because borders aren't really congruous with my needs. I don't play nice with borders and borders don't play nice with me. And when I say borders it's like
borders are like so stupid. I was just in Croatia and I had to drive from one part of Croatia to another, and Bosnia just like cuts in the middle of Croatia. It's so stupid. And so to exit Croatia, so you have to, if you're driving from like Dubrovnik to Split, you're driving up the coast, then you have to get to a big border control. You cross out of Croatia into Bosnia, then you're literally in Bosnia for 6.5 minutes, then you have to exit Bosnia and go back into Croatia. It's so stupid.
That's crazy.
Yeah,
that's crazy. It's so inefficient. And it's like all these digital innovations that's what they're made for is exploiting inefficiency and making markets and things efficient. And ultimately, all these borders is a market. It's a global market that's been segmented into borders, and it's inefficient because of those borders.
Yep.
What do you think, though? So if you had to guess, I mean, you obviously seem to believe sort of what I do, that it has potential. Do you think that can happen?
It all comes down to liberty. It gives us all freedom. It gives us all liberty. It gives us the ability to do whatever we want. And it's a globalized world. We get on the phone, and there's this kind of running joke now that we do when I do business calls. It's like we have the identity assumption. I can't assume your identity. I can't assume what passport do you hold, Drew. I have no idea, and I can't honestly try to assume what passport you hold based on your accent anymore, or based on who you are, or anything about you. Tess, I have no idea. You could be Chinese for all I know, and I can't insult you by saying that you're not, right? You could be any identity you want. What passport do you hold? And now we're in that world where it just doesn't matter anymore. It doesn't matter who you are, where you're from, and how you are. And so it's definitely changing that. And I'm telling you, it's gonna wars. You know, you have soldiers that still have military service, Austria, places like that, Norway. These are neutral countries, but you have other places where they're somewhat hostile countries. And now they have army service, but these are guys who are playing video games with friends all over the world. And so now you're telling them to go to war against someone who's potentially their friend on Facebook or on video games or in crypto or whatever. They're a lot more reluctant to do it. And on the higher up, the officers, the generals, those guys are not going to want to do it either. And it's reducing the ability to fight wars. And that's why it changes.
Very, very interesting. It'll be neat to see what does develop in the next 20 to 30 years.
Give me a timeline. What do you think? You know, just ballpark. What do you think?
I think it's a scale. I think we've already seen it happen. But it's definitely a scale over time. It's not going to be like
for sure
today or tomorrow, but it's happening. It's happening fast, and it's definitely like it's going to be like a hockey stick, and it's changing. And we're going to see. You're seeing a lot of like pushback. You're going to see. Right now, we quantify human beings with money, and it's a big problem because money is a big way to quantify our. It's the only way to quantify our scoring system in the world. And there's other things like social credit, right? How many Instagram followers you have, and so that's kind of changing. But you're seeing now a lot of countries offer passports for investment visas, and you could buy a passport. And yes, the barrier for entry is high, $200,000 and up, but it's not tens of millions. $200,000 is definitely doable for a certain class of people, and that's gonna decrease. So that what they're gonna do is, I guarantee you'll see countries now offer passports where if you work for a company based in this country and you work for them for a year and a half, they'll give you a passport. So now it's going to be based on like job skill and like socioeconomic contribution. And you're going to see that, and you're going to see passport arbitrage. You're going to see countries now, we want this guy, we want this guy. And then one day we're going to wake up and we're going to say, what the hell is the point of the passport anyways? And it's going to change everything.
Who needs a passport when you got a domain name?
True story.
So, couple things. You were talking about the asset allocation with the property and this, and I was listening to an interview last night with you, and you talked about, I think it was from a few years ago. I think it was right before you got married, I believe, or I don't remember. And you talked about 33% crypto, 33% fiat, 33% property. Is that still an allocation you feel comfortable in?
It's a good allocation if you so that's pretty much what my portfolio is at. The thing is, so if the real estate is income producing, then it's good. And if you can live off that income producing real estate, even better. It's hard to do that because after taxes and insurance and costs, you're probably making, if you can make 6%, if you can make 8% or 9%, then you're paying 3-4%. So that other stuff, and then you're living off the other 5%. That's not bad. That's pretty good. That's what I aim for. But that offsets.
That's hard to achieve.
It's hard to achieve.
It's hard to find today.
So you need to create other income. And my goal is like that FIRE kind of goal. My goal is to have enough money to be able to live off the income in a somewhat passive way. Passive meaning that I'm giving hours to it every week, but I'm not like dealing with it on a 9-to-5 basis. And it's hard to get to.
Very hard
to get there, but that's kind of like the goal. So real estate, crypto, and cash. Now I'm starting to wonder if like maybe it's a good idea to have that cash in more than one currency. Having it all in dollars is kind of foolish. Euros, Swiss francs, gold.
When we say fiat, I think we're also talking about fiat denominated instruments. So it could be equities, could be bonds, could be
liquid.
Liquid. What something with things which are relatively liquid?
I just don't trust. I know I'm only getting 2% with dollars in a bank account, and that's a good interest rate. I just have a hard time trusting like buying bonds. I have a hard time trusting the stock market.
Me too.
And I'm one of the few people.
I'm with you 100%. I
nothing in the stock market.
Yep.
don't trust it.
I simply don't trust it. It doesn't make sense. You know, it's like,
No.
I love Amazon, man. I think Amazon is the bee's knees. We've got multiple packages coming to the house every day from Amazon. If I could buy everything that I buy, I'd buy it from Amazon. If I could buy a car on Amazon, I'd buy it on Amazon. But that being said, it doesn't make any sense to buy equity in a company. This being said, I do own some stock in Amazon, but it still doesn't make sense to me. I don't feel good about that investment because it's like, it would take something like 99 years or something to get a return on that investment. And it's like, how does that make sense to anybody?
It's
you're
crazy.
betting on this like artificial inflation and growth that doesn't
People
make
don't
sense.
realize. So that's the thing. Amazon is a country in of itself. Like, if you look at the numbers,
Totally.
Amazon has created, I think, a little under 500,000 jobs, right, around the world. 500,000 jobs, right? They got 50,000 applicants a day, and they've created more jobs than like 46 states in the past quarter. And it's a crazy thing to think about, right? That's a great example. But we don't give them any credit. We just look how bad. I have a lot of friends who work for Amazon, and they treat their people right. It's a great company to work for, and it's like a good example. So why can't you have an Amazon passport? But we have to be very careful. There's a great book called Jennifer Government that people should read. It's called Jennifer Government because the lady that the book is about, her name is Jennifer. She works for the government, so her last name is the word government. But if you work for like Microsoft, your name is David Microsoft. So your identity becomes attached to the company you work for. But it's like Black Mirror stuff. It's like extreme opposite. You know what I mean? But it's interesting.
It's good to read that stuff or watch that stuff because it's like watching Star Trek in the 90s. You know, it's like, Star Trek in the 90s, it seemed very foreign and insane at that time, or even the Jetsons, right? It's like, but shit, we're going to be pretty close to there in the next 5 years, 10 years, you'll be able to go and I remember thinking the coolest thing on earth would be if I had that machine in Star Trek where I just go and I'm like, computer, I want a, latte macchiato. And then, the computer basically prints a latte macchiato out of, thin air, out of atoms, molecules. And, or you could easily say, I want a steak dinner. And we're so close to that. We're printing organs. We're printing. I just read something 5 minutes ago. We're printing blood vessels. They just discovered how to print blood vessels.
It's crazy.
So it's probably not that insane, even though it's, you say, oh, it's Black Mirror stuff. It's way off, but it probably is pretty good at foreshadowing where we're going.
Yep.
So, sorry, in the introduction, you were talking about BitInstant, and, that didn't have a particularly happy ending, unfortunately. But
it was no, it's okay. It's like, it was part of the process.
Yeah.
The company couldn't exist longer than it kind of outgrew itself. The industry outgrew, the company was started for a specific reason and
filled a vacuum.
It filled a vacuum, but the industry outgrew the company. It was kind of like training wheels, and we had an okay ending. The government came out with regulations that says, all right, now Bitcoin's money in 2013, and you need all these licenses. And I was like, all right, well, my competition raised tens of millions of dollars, and we're okay with it. Let them deal with it. I was good. 3 years running a company, I was exhausted.
Yeah, I don't blame you.
Yeah, it's particularly different in these emerging markets of of cryptocurrency and domain names. A lot of law isn't written. A lot you see in the very beginnings. So many companies and individuals are affected. Like Drew and I just did an interview with the Internet Commerce Association, and they're trying to get some laws to be created for domain names that have at least been around 20 years longer than cryptocurrency has, and it's a huge struggle. I actually want to ask, what is the difference between cryptocurrency and digital currency? Can you just speak to that real quick?
So the idea of digital currency has been around a very long time. Digital currency is basically, well, like our dollar is technically digital currency, right? Digital currency is basically currency that's digital. It's not physical, you know, a $20 bill in your wallet. Your bank account is digital currency.
Yeah.
I think it's like, I don't know the exact number, but it's less than 10% of the actual dollars in circulation are physical. The rest of them is digital. Then there's like digital currency that's not government created. So there was like e-gold and there was PayPal dollars, right? Like PayPal dollars are worth different than dollars in your bank account because there's like a cost to getting it there and whatever.
Yeah.
That's
So
currency.
PayPal, on the subject of PayPal, when we started Media Options in Panama, I guess it's because of the banking laws or whatever, but PayPal is actually not a bank. If you are a Panamanian customer, a corporate customer, or private citizen.
Oh,
and
really?
so like we ended up doing a lot of business in PayPal, but you can't withdraw your money. So it was like, you feel like, oh yeah, sure, we just sold a domain name and we got $5,000 on.
So what do you do with it?
Account. You can only spend it by PayPal.
Oh, interesting.
Yeah.
It's interesting.
Only good within the PayPal ecosystem. And very few people even know that. And there's some other jurisdictions where PayPal does that, where they don't have a bank license. And so you can receive money and you can have it, you can send it, you can spend it, but you cannot take it out of the PayPal ecosystem.
So that's pretty interesting. So that's you know, that reminds me of when the whole Cyprus thing was going on. I knew people who were willing to, hey, I have $1 million euros in my bank account in Cyprus. If you let me transfer it to your bank account in Cyprus, you'll give me 790,000 euros in somewhere else in Germany, for example.
Yeah.
The value of a euro in Cyprus was different than the value of a euro in Germany because people couldn't get it out. It's interesting.
Yeah.
No, money's relative. Money is completely subjective. It's very interesting. It's relative to something else. So money is a value relative to something else, right? So the dollar was value relative to gold, and it's an interesting. It's a huge rabbit hole that we can go down for.
Yeah.
So Charlie, go ahead, Drew.
Well, so the last question that I had written down here that I was really interested to hear more about, as it pertains to domains and some of the other things that I'm interested in, like real estate investment and art, etc., is the idea of security tokens. And that seems to be like, I mean, I wouldn't call, I don't think I'm deep enough in the crypto world to even say I'm a Bitcoin maximalist or a maximalist, or I don't think I can identify as anything other than, you know, to me. So let me back up one second. So to me, what I've sort of always believed since like Ethereum popped up, and then followed by a bazillion other things, I felt like Bitcoin was the .com. It was like nothing else really matters. And even though like you can do all these value added things with all these other currencies, and it might not, Bitcoin doesn't move as fast as some of these other ones. It's like, I feel like everything else is just a test bed. And it's like, okay, cool. You've launched this other new cryptocurrency and it's got all these cool functionalities and it might do this better than Bitcoin. It might do that better than Bitcoin.
It doesn't matter. It's all the same. Bitcoin had the market share, and that's what mattered.
Yeah, but in the end, won't like once these functionalities are proven out, wouldn't Bitcoin just adopt them through a hard or software later?
That was the debate and that's what was and is my argument over the course of time. The difference is this: technologically speaking, you know what something will do when you write the code for it, but with psychology, you don't know how people react to it. So when I say that, like, you know, even something simple as changing the block reward time, which will make something a little bit less secure, or changing the way rewards are set up or whatever, that could be a fundamental shift in socioeconomics. And Bitcoin is a very fragile, like, socioeconomic experiment, and it works. And it's been through these trials and tribulations of time over the past 8 or 9 years, right? And it's been through the bear and the bull and the bear and the bull. and it works. And so the developers and the people that are invested in the project are very reluctant to make these sudden changes unless they're tested over the course of time, because it could break everything, which is why something simple as like bigger blocks was so vehemently opposed, because let someone else try it first and then we'll see how it works on Bitcoin, which we saw. They launched it with Bitcoin Cash and it didn't work. The bigger blocks don't work because it centralizes control in the hands of very few people. And so that's why that's the problem.
And so, but I don't even think it's a problem. I think it's the right method. It's just,
it definitely is.
Everybody's impatient and they want everything now. And I think you just have to wait for it to flush out. And I think that hypothesis, if you will, is it's the same as what I've got. It seems like, oh, okay, well, let some of these new fundamental things play out over the next 5 years. And if they work and nothing breaks, then great, let's put it into Bitcoin.
Exactly.
But I've just never, it's like, I tried my hand, at the roulette table, buying a bunch of altcoins, and, it's not my daily thing. But I guess there's a lot of money to be made if you're going to be trading it, which people could do with some advice from your Crypto IQ, which I'm also a subscriber to, by the way.
Awesome.
But I think, ultimately I just always come back to the thing of, it's just all going to be Bitcoin later when it all is said and done. So, but that's
what it comes down to.
On that same note, okay, the place where I break away from that is this idea of security tokens. And I really love this concept because I'm a deal guy. Like, I don't like building things too much. I like buying things and selling them and arbitraging and finding, market inefficiencies, and that's where I thrive. And so the idea of security tokens is like, how cool is this? Now, instead of having to buy a house and dealing with the plumber and the electrician and the property taxes and all this stuff, it's like you can buy a fractional token of really awesome property.
Yeah, it works. It's just then you have the jurisdiction that you have to figure out how that works, and then there's all these laws and everything. And it'll come through, and they are really cool, and it'll come through. It'll just take some time for that to work out, but I think that's definitely something that's going to happen.
So talk to me about that. That was one of the things, I think, that I was really intrigued to hear a little bit more about.
Security tokens, the method of which attaching the asset to the token itself, that still hasn't been figured out because it relies on a counterparty, whether it's a company or it's a jurisdiction or it's a government. So no one has figured that out. What you need to happen is you need like an army, like a government, to basically say, all right, we acknowledge that if you own this token, you own this property. And until that happens, you have to rely on a company, and the company could go out of business, or the company could screw you over. And there's a counterparty. People don't really want to do it. So I don't see that happening until that jurisdiction comes out.
So this is what boggles my mind. And I had sort of briefly mentioned this to you before, but it makes so much sense to me that because domain names and cryptocurrency play so nicely together, that domain names should be the first securitized asset to be tokenized, because you don't require.
It's definitely a good idea.
There's no counterparty. You don't need a counterparty. With the current technology, okay, there's no registrar which provides this or has the capability today. But technologically speaking, it is fully possible today to take a domain name, fractionalize it, tokenize it, issue these tokens, trade the tokens, and have that through the current registrar system, have that domain living at a registrar. And I mean, okay, ultimately the registrar represents a counterparty, but they're governed by ICANN, which, controls the whole thing. So
it's a good idea. The only thing is that domains have to be income producing for people to want to even trade it. They can't just be like something that people want to hold long term, because then it won't really, it's more like a long-term asset type of thing, which could be still good, but it won't be traded much. And
look at the art market.
Yeah, but people own the art and they get value from having the art hung up in their homes. They get the sentimental value. It's a little bit different in properties.
Although I think it's something like 80% or even 90% of the world's most valuable art is not hanging on somebody's wall. It's sitting in a storage in Switzerland or in Panama or in Singapore.
True, but it's the same thing that people don't sell their crypto. Why does it have value? But it's knowing that they could sell it at any given time is what gives it value. So knowing that I could hang art or sell it to a museum so people can enjoy it. No, I'm not saying it's a bad thing. I think if you could create some utility off the domain names, create some domain leases or something like that where people are using the domain names, then that would give a reason to securitize it.
So that's my idea, is that I feel like it self-perpetuates. If you tokenize it, you allow fractional ownership, you increase the pool of people who would be capable and interested to invest into the domain market. Second of all, by fractionalizing it, you're offering social proof. So it's like, well, there's 5,000 other people who own parts of this domain name. I feel comfortable owning a part of that domain name, as opposed to I'm going to be the guy that goes all in on this domain name. And then lastly, if you increase the pool of people who are interested in the market, you increase liquidity and you increase values.
True story. It'll help everything along the way.
Yeah. I feel like it would sort of self fix all the issues, that we've flushed out.
I think over time it'll be great. It'll be a great way for people to earn more passive income as well.
And so as the values increase, right? As the values increase, then you get into a market like you did with commercial real estate, where commercial real estate became so expensive that most people don't buy it, they lease it. And so if domain names are basically, the ownership of the domain becomes decentralized, so you're de-risking the use of that domain as a leasee, as opposed to having to deal with one crazy schmuck, who lives in Panama and turn the domain off on you. So now you've got the domain names have increased in value, where it makes more sense to lease than to own. And so now those the tokens do generate income through the lease of that domain name. I know we're a long way away from there, but I feel like that is. No,
you should try it out.
It's the most straightforward path to security tokens of any other use case I've seen so far, because of everything you said. It's like, sure, sounds great in terms of real estate, but I don't actually have a claim to that real estate.
I mean, Drew, you have been talking about the intersection of domains and cryptocurrency for years, when no one has been talking about it. I think that you've developed this fabulous vision. I'm curious, Charlie, do you see do you have any advice for that vision besides, I heard you say go for it.
No, just build it.
But
create a use case. Find a few domains that can create some income, some lease domains, and then create a security token around it and break it up and see what happens. It can't hurt.
All right, thanks.
But I gotta run, and my mouse died. I gotta run in 12 minutes. And my mouse died. I gotta be somewhere 12 minutes. My mouse died.
Not a problem.
Big problem.
I think we're pretty much good.
Awesome.
I could literally rap with you about this shit all day, but
I know.
Charlie, before you go, tell us, if you have anything you want to shill to our audience. Promote anything you want to promote to our audience.
Check out Crypto IQ, our site crypto.iq. It's a education newsletter company for $30 a month. You get access to all the data that's in my brain and all the research reports and trading signals and everything we put out. You'll love it. It's a no-brainer and an easy subscription fee.
Fantastic. Well, it looks really fabulous. CryptoIQ.com. Charlie, you are a big deal. Thank you so much.
Thank you. Thanks for having me, guys.
Great to have you.
See you later.
Super glad. Thank you, Charlie.
Bye.
Cheers. Bye-bye.